What's going on, family? If you're here, let me know. If you're in the chat, if you'd like to let me know where you're tuning in from, who's here, that'd be awesome. If you are tuning in with us for the first time and you're replaying this, that is awesome as well. We'd love to have you here live. So, as always, I like to curate vibes. I like for this to be a safe space, but also a informational space. So you're coming in with all the stressors, the strains. I like to, you got to be a little bit different. You know what I mean? And for me, it's always like, hey, how can I have a clear mind, a clear heart, a clear spirit, and also just be able to utilize this skill set that we're blessed to have. And essentially just there's nothing else like it, right? There's nothing else like it. There's nowhere else where you can click buttons and make money when things are good, make money when things are bad, and also be able to essentially do it with very controllable risk. Doesn't take a lot of money, doesn't take a lot of effort, just takes time. And a lot of folks just don't want to give up their time. And that's cool. That's cool. So appreciate you, Hustle Jr. Always, man. Appreciate you for the kind words on Instagram and coming through there. And then also tapping in with the YouTube channel. My man, Marlon, what's going on from Miami? Anyone else who's tapping in? All right. So I started a little bit earlier this time. I'm still giving my normal 10-minute buffer. So we'll start in 2 minutes here. So I'm starting to do this just because it gets later, right? It gets later in the evening on the East Coast and getting darker earlier. And I'd rather personally just lock in, get it out the way, and go about our Sunday evening so you can be well rested and spend time with the family, yourself, whatever you want to do. Cool. So we'll spend about an hour 15 together. I created that. I'm going to start creating those Saturday videos just so people can already have a head start. So if you enjoyed those, let me know. But that Saturday video yesterday allowed us to really come together and just go ahead and get most of this out of the way so we don't spend too much time live on here, right? But the live is important because you can also ask questions, right? That's where it comes from. You can already come in with a sentiment. It's like, Brian, you talked about that, on Saturday, can you clarify that here on live, right? So I'm gonna start creating that Saturday video synopsis of the week, what I think of the week, how'd the week go, recovery, and then maybe what to look forward for the next week. Sounds good? Cool. All right. Well, let's just get started. Let's get started. All right. So let's get the housekeeping stuff out of the way really quick, if you don't mind. Go ahead and share my screen here. Share my screen, get the housekeeping stuff out of the way. And what is that? That is our... Now, I have two ways I'm going to do this. It's that 2-day live event. The reason why I'm doing this is because my boy Trent is on here. So shout out to Trent and also Marlon. I get feedback from my Leverage University members. If you can see there on the left-hand side, that is our Discord behind there. That's our private group. If you want to join that, that's cool. Black Friday is the discount code. But there's been people asking for a beginner's course or, beginner things to get them started. And, whether I do it live, whether it turns out to be great or whether I record it, I'm going to do it regardless. Right. So what I'm going to do is I'm going to turn this into a little mini course, little mini starter pack, whatever it might be, just to simply say, I know this is intimidating. I understand this whole thing. You don't know. I think some of y'all know, because Trent, you're probably telling your people, Marlon, you're probably telling your people, anyone else, you're yo, there's this thing, you should really tap into the stock market. You should really take it seriously and try to figure that thing out. And they're yeah, I'll get to it. And you're okay, I'm trying to tell you, right? Because there's multiple different ways and most people are very unidirectional in their thinking, right? Which is what I used to do. I'm well, shares, if I buy some shares, it's going to take forever to get this $1,000 to grow, right? Or it's going to take, I need money now. So there's multiple different ways that if they have a job, if they have things in security, cool. You can also learn how to long-term invest better. I think Trent, you've done a great job of that, of saying, oh man, if I understand these charts, I have a better way of understanding where to buy Bitcoin, where to buy this, where to buy that, right? And if someone wants to learn how to trade, then they can make intra-week income. $50 would do wonders for some people. That would take care of a bill, whatever it might be. So this is kind of that thing that I want to get started for the new year, is have something there for people to say, hey, what can I just watch for 5 to maybe 10 modules and just kind of get my account set up, get the chart set up, understand the basics, and then be less intimidated maybe coming in as a beginner into this group and being a little bit lost, right? So that's why I'm doing this. And, that's the real reason, right? So just kind of want to explain to y'all what that is if you were explaining to other people. So it will be not just tomorrow and Tuesday when I record and do the thing. It will be an ongoing kind of, hey, Brian's coming out with this little, finding your edge mini course that you can take and get started, right? So just kind of want to throw that out for anybody. All right. Cool. If you want to join the Discord, you're more than welcome to. If you're already in there, appreciate y'all on the support. We got more and more people coming from the YouTube channel that have been watching for a while, and we do live trading, but it's not just live trading. We're teaching. I answer questions. I actually am a person that talks to my community members and responds to them as much as I can and answers questions and goes back and forth in here. So I think it's great, whether you're a beginner, intermediate, or advanced, just to be in a community. And if you choose this one, that's cool. All right. Awesome. Let's jump into it. So as always, I always give a little bit more of a, let me jump back into my bigger here. I always give kind of a rundown or kind of a synopsis of how this goes, because I have people that rewatch this and I want you to not get lost or have everything together. So the first thing I do is I go over fundamentals. That just simply means what's the news for the week? What's maybe some interruptions? Is President Trump speaking? Do we have Fed Powell speaking? Do we have data reports coming out? Do we have big earnings, which, as we know, all earnings this week are going to be eyes focused on NVDA on Wednesday after close. So that's what we're going to talk about this week as well. Throughout the week, I'll make an NVIDIA video. But there's other things as well, which are the technicals, right? Which most people are kind of blind to. And that's really where I like to focus and make my money, to where I'm not a genius. Like I said in the video yesterday, like I'm not a person that says, I know everything. I know exactly where the market's going. But when you understand how to read the charts, and I think my community members and those who have been learning on the channel know that when you start reading the price action on the charts and start learning these moving averages and what happens at those levels and what typically the reaction is, then you can know generally how to react one way or the other. If it gets above a certain level, okay, cool. Step out of the way. It's going to the next level on the upside. If we have conviction that it potentially could reject, right, and this is a trap, then don't get too horned up, like I've been saying, on the upside, and then we get rejected and come lower potentially in the next coming weeks, right? So that's what this video is about. It's going to be kind of that indecision. Do we rally or do we get denied? Y'all remember what happened to Palantir after their earnings? They popped, great earnings, and then sold off $30 to $40. Get my drift? So let's stay, as I like to say, head on a swivel and figure out how we can make money this week with also managing our risk. Okay, cool. All righty. Let's jump into the fundamentals here. What do we have on the docket? Let's go earnings first. If you aren't following the Twitter as well, I've been posting some things on there as well. If you'd like to know, some general charts or ideas just for people to kind of think about. So I'll be doing more of that as well. Obviously, most of that is in our Discord, but every now and then I'm like, hey, let me throw a little bone here to make everyone feel like they're welcomed, right? Earnings Whispers, where I go, they make it very nice and easy here for the earnings report. Where is it? Because you are doing the charts this time. It's usually right at the top for the new. There it is. I'm skipping right over it. Okay, cool. So here we go. Really all this is noise other than NVIDIA, right? Some secondary key players that you may want to kind of pay attention to is Target, right? Because they're getting absolutely pummeled based off of people boycotting and so on and so forth, but they are in a good buy range for Target. I think they'll eventually recover. So you might want to pay attention to essentially how Target's earnings go. Are they beating on earnings? Are they growing in revenue? Is their EPS, right? They're seeing growth for their guidance. Then Target could be a potential opportunity, if you so see fit, to have shares in Target to retrace it back above $100+. Walmart, right, holding up very well above 100. It dropped down after their new CEO came in. So they got their new CEO. Walmart had a little bit of a blip, right, down underneath 100, recovered very, very quickly. And I think Walmart still has legs to go well back above the 110 level potentially on their earnings, but we'll just have to see. So I'm watching the price action on Walmart. Looks pretty good. So I would say Walmart, Target, NVIDIA. My mother, she watches these. She's invested into TJ Maxx, Home Goods. You already know the ladies out there and my men, right? The TJ Maxx and Home Goods line is out the daggone door. Okay. So that's always a fun one just to watch. I may be interested in seeing how Webull performs, right? Webull was a high conviction kind of Robinhood secondary. Obviously I use Webull for my charting and also I trade on there, but Robinhood has just kind of taken the cake, so to speak. And Webull could be that next one, but need to start paying attention to their earnings to see how they're performing. Are they growing, or is Robinhood taking a little bit of, market cap away from them, so to speak, taking business away from them? We'll have to see. All right. Palo Alto, cybersecurity sector. That one's going to be interesting. So yeah, Wednesday is going to be the highlight. Wednesday is going to be the highlight. If you see anything else on here, put it down in the chat. Home Depot is always a good mover as well. Okay. Cool. But other than that, all noise other than NVIDIA, really, for our sentiment for the overall market. Okay. Let's jump into our Forex factory calendar here. And I do believe some of these reports will be coming out finally. Okay. Finally. So I don't see any tentativeness here on the calendar. Wednesday, the 19th, it does, let's see, US. Where is it? Unemployment numbers. Okay. That Thursday before the market opens, you see USD here, the unemployment rate, that non-farm payrolls that we were supposed to have 2 weeks ago, 2 Fridays ago, I believe. And that will move the market. So Thursday morning, if the jobs data that they say they're hiding is bad, then we could drop. If the jobs data comes in somewhat decent, then we could spur higher, right? So Thursday morning, going to be very key. In my opinion, and I've told my community this before, that, and anybody on YouTube as well, if you don't know, when you have big data reports like this, like the FOMC meeting minutes, this isn't an actual FOMC meeting. It's the reading of the minutes from the last FOMC meeting, right? And we know that the last FOMC meeting was more hawkish, more bearish, when Fed Powell was essentially saying we're flying blind. I have no data to go off of. We don't know if we're going to cut rates, things of that nature. So if that's the sentiment going into this, right, my sentiment kind of for Monday and Tuesday could be some little bit of upside, right? Little bit of upside as per usual, that short squeeze recovery, kind of like we had on Friday, a little bit of grind upside. And if we have this data coming in on Wednesday and Thursday, that is when some profit taking can come in. And then the market will just sit and then react based off of NVIDIA earnings and Thursday. So the best trading days this week will be probably Wednesday, in my opinion. NVIDIA could be a little bit, shaky sideways, depending, because everyone's just waiting. But the FOMC meeting minutes on right here, right, that afternoon, right before NVIDIA reports, could create some volatility, right, leading into that potentially. So I would say Wednesday and then Thursday would open up the floodgates. Monday and Tuesday, right, we could have some cash flow trades, some decent setups. How I like to trade Monday and Tuesday, I know my boy Marlon's on here. He kind of takes off Mondays in our community, just kind of sits and watches, maybe taps into live trading a little bit. But Mondays and Tuesdays are kind of like, do I see a setup that's simple to take, right? Very low risk. It's not very volatile stock. It may be something that people are like, you're trading that. Like it may be a SoFi I look at. It may be something that doesn't have any interruptions. Those are the ones that I typically look at on like a Monday and Tuesday potentially. Still trading my top tech stocks, the S&P 500. Obviously, I'll even look sometimes at IWM, the small cap index for the Russell 2000. I'll look at that because I know that it's not going to go crazy in one way or the other and kind of derail my week, so to speak. So if you ever want to know my thesis, I know I tell my live trading folks inside of Leverage University, but that is kind of how I trade Mondays and Tuesdays, is kind of trying to just get some cash flow if I see a solid trade. But I'll look at those IWMs or SoFis or, maybe even an INTC, an SMCI. I like to trade Google, Amazon. And then I'll leave some of the AMDs, the NVIDIAs, the semiconductors, the big movers towards the latter half of the week once things kind of settle in. That's just my trading style. Doesn't have to be for everybody, but just kind of give you guys a sentiment of how I typically choose tickers. And I'll create a separate YouTube video about how to choose what to trade, right? All right, cool. So there is that. What else we got? Let's see really quick. I don't think Trump is speaking at all. I don't believe. And if anyone wants to comment down below if y'all have any other information, I don't think he's having any Trump speaking. West Palm Beach, schedule this week. Yeah, I don't see anything just yet. If y'all have any other updates or if I have any other updates, I'll post it in the chat, but nothing as of right now. All right, so let's go into kind of a piggyback on the video I made yesterday, okay? So one thing that I want to make sure that people understand is the fear and greed index that we're in right now, okay, is that we're in extreme fear. That is typically, as I've taught people, and it's nothing new under the sun, but extreme fear typically creates opportunities or buying opportunities, right? So where does that create buying opportunities? It could be in the big tech stocks. It could be in some of the beaten down, and I know a lot of people have questions around CoreWeave and Nebius and Brian, what's going on with the quantum stocks, Ionic, QBTS, RGTI, like all those are rallying. Can you talk about that and the pullback? What about Bitcoin? I'm going to talk about all that stuff today. So this extreme fear is a opportunity, right? But we, from the charts, as we know, don't necessarily have an idea when it comes to trading where the bottom is. Shares, buy up some. If your conviction on, if you have conviction on Nebius and CoreWeave and some of these data centers and things of that nature, buy some up, right? I'm not here to say, hey, wait, hold on. And then it rallies. You're like, dang, I should have bought some, right? This type of market, when we're dealing with AI and the AI race and the movement, is very much of a conviction research. I was listening to a recent podcast and it was on I forgot what it was, but it was a heavy investor. And he was talking about many investors have gotten lazy in their research. So they just listen to, you just say a YouTuber, like I don't even classify myself that, but just listen to somebody saying, hey, you should buy this. Or they'll Google and they'll see on YouTube, top 3, 4, 5 stocks to buy right now, right? And that's all they'll go off of, right? Versus the conviction that you may have in saying you did your own research. Like, man, this makes sense. If AI is going to be the future, well, there's going to need to be data centers to power that AI. And then there's going to have to be energy to fuel that for the energy centers. And then that all works in tandem together. Okay, that makes sense for something like energy sectors or rare earth metals, or you being very convicted on gold or silver, whatever it might be. And, you know, for those that are familiar with Bloom Energy, right? Like, why did this pop so aggressively? Right. So if you're convicted, then you buy based off the charts, not at the perfect level, but on pullbacks that you have. And then you get the deeper level because a lot of these are so volatile and they ran up so quick that we know the faster they rise, the harder they can fall. They can give back 50 to 70, sometimes 100% of the whole move just to settle in and rally to new highs. So I just wanted to mention that really quick before we go into the entirety of the market, simply to say that, you know, when we had these pullbacks and like, is this the bottom? Are we going to have a crash? Get your levels set to have buy zones. Okay. So I don't normally do this, but let's jump into crypto first because that's what's moving right now. If y'all are cool with that, let me jump into crypto first and talk about that right away, because that's going to be on a lot of people's minds, because crypto, whether you're invested into Bitcoin and or, you know, Ethereum, Solana, any of the cryptos, even some of the altcoins, if you're not, crypto has been one of those signals, specifically Bitcoin, of a risk on or risk off environment. When Bitcoin is moving heavily, it's kind of been moving in tandem, in correlation with the overall market. So we look at crypto, or a stock investor should still look at crypto to analyze where crypto is going. If crypto is starting to break trend a little bit, that just signifies de-risking, profit taking. That does not signify a crash. It just signifies, okay, de-risking up here. There's a little bit of uncertainty in the markets. It's the end of the year. We've ran tremendously. Let us run it back down because everyone is on their high horse. Y'all remember when everyone was like, man, crypto, it broke 100,000. It's going to 150. It's going to 200. When everyone is saying that at the same time, what do y'all think is going to happen? Right? The markets and market makers don't want to do or give the people what they want immediately. So if you and I are saying, man, it's going to 200,000, it's above 100, there is no way that this is going to 200,000 immediately in 2 months without a pullback. Like, let's just be rational here, right? So we know that the stock market and obviously crypto, if you look at a chart, that's how I know that people don't have a chart. I'm just going to be very point blank, is when I start hearing just random stuff. I'm like, well, by when? You want 200,000 on Bitcoin by the end of the year in 45 days without pulling back to 75? Okay. Right? So I use the tools based off the chart to see patterns, and then I react to those levels and patterns. Okay. So one thing that we see on Bitcoin here, and guess what? We talked about this where? Inside of our community here. If we jump into the crypto section, if I go to the Bitcoin section, Bitcoin on a weekly trend support, 95K. If I look here, going all the way back, we're giving the Bitcoin bull flag off 75. We talked about that to 100, right here at 95, using that. And then now we're targeting that lower end of the range, right, at 90,000 psychological level below. Buyers should step in around 90 to 93, which is what they're doing right now. Okay. So we're getting that 90 to 93. If we look on there, we look left and we turn on some of our high volume nodes or our volume profile here. It should show us that. Let me look, maybe it'll show it on the daily, maybe. Nope, doesn't show it on here. Okay, cool. So if we look left, where do we have buyers sitting right here? Around 92,000. Okay, around 92,000. But I have a bigger buy zone, in my opinion. Since it broke trend, it typically likes to gravitate towards the lower end of the range, which would be somewhere around the 75 to 80,000. All right, 75 to 80,000. Somewhere in this box. So I've got 83,000 to around 75,000 or so. So just round it to an even number of 80, right? So in my opinion, can we see a little bit of a pop from here? Yes. But if we know the charts as well, where are we still below? We're still below all these moving averages. Daily 20, daily 200, daily 50, daily 100, pressing down on, in this case, not the stock, but Bitcoin. Okay. So when we get below all those moving averages, it presses it down to typically more of a lower end of the range. Okay. So we could get a little bit of a pop and a recovery. It would look something like this, and we get a pop and you're like, man, Bitcoin's back. I'm like, has it reclaimed any of these moving averages back to the upside? Right. So we could go from 92 back to 100,000. Right. Does that signify the bottom? Maybe. Did you pick up a dip? Maybe. If you did, awesome. You got more in. You have a long-term outlook on it. But also, there's a rejection that could happen here, and we come to the lower end of the range, and I want to be prepared for potentially that. All right. So that is Bitcoin and levels there. Now, there's a lower end that I'm also prepared for as well, which is why I always have for specific buy zones, typically 2 to 3 buy zones. So first buy zone right here. So if I start marking off my chart of where you'd want to pick some up, buy zone 1, which would be right in here. Okay. And then you dollar cost average. If it drops below 90, buy zone 2, right there. And then the ultimate buy zone is if somehow miraculously the market just gives it back and we pull back into 60, right? That would be a gift, right? Because that is right in alignment with that previous high from 2021, previous high from 2021, and into this level that we bull flagged off of right into, the mid 60s. Okay. So that is my analysis over Bitcoin of how that would look based off of 3 different buy zones. Okay. So Ethereum, I always have my buy zone at Ethereum roughly around 2,500. We talked about this in Leverage University, that buy zone on 1,500. That's right in alignment with that previous level there. And then we've got a break of this structure here. As you can see, it broke trend, uptrend, uptrend. And if it was going to stay up here, it would have stayed above, ideally, this 3,800 to 4,000 level, okay, and bounced. So Ethereum will probably have a little bit of a bounce, but ultimately I think it's trying to come back to the mid 2000s, right? Mid 2000s on Ethereum. I think it's just breaking structure, trying to come down to that lower end of the range right there, personally. Solana, we talked about this. Someone asked me recently about Solana, and I just simply looked on the chart and I was like, I see buyers sitting at 115, 120. Where is it headed? About $15 off of that, right? And that's simply from a chart. So stocks will rotate, and if they break a level, break support, they're coming down to the next support zone so they can pick up more liquidity buyers to drive it back higher. So I think Solana is coming into a great buy zone, just underneath 130 if it can get there, right? 115, 120 area, but I think 130 is also a great buy. Now, just say we have a crash or something crazy happens. I want to be prepared for Solana underneath 100 again, right? If you are convicted in Solana, if it falls down to there, there's that area of interest at, $77, $80 underneath the 100. Okay. Cool. So in my opinion, do I think it's great to, look at crypto right now? Yeah. Some other crypto stocks or mining companies that you may want to look at that we have done very well on is CleanSpark. Okay. CleanSpark. This one was a beautiful one. If we go into the community here and go to our shares and leaps, I separate it by threads. So each one has their own thread. So anytime I see something new, look exactly how this reacted. Do you see this was posted on March 5th of this year? CleanSpark, our buy zone was right at $8 to $9. Do you see that bull flag and the trade idea? Where did it go? Right back to the top end of the range at $23. If we look at the chart, look how beautiful that was. So if I draw it back out here, there's the idea. Right? So CleanSpark, bull flag, double top here, and it's coming back into a buy zone of roughly $8 to $10. Okay, so CleanSpark I think is a great one to look at, and we typically do shares on this. If you want to do options, that's cool. But if you just think of double ups, I always talk about that on my lives. Double ups for CleanSpark would be taking it from ideally around $7, $8, $9, and then doubling it to 19, 20 again. All right, there's your double up. There's a little gap here as well. Rotates, finds a bottom, rotates back up to the highs. Then ultimately, when Bitcoin has its next run or crypto has its next run, we could get these higher ends of the ranges up here at mid 40s. Cool. So CleanSpark, keep an eye on. Everyone's talk of the town. Tom Lee's BMNR, Bitmine. This is another one that maybe keeping an eye on. Obviously, it's volatile. Do your own research on it. But just based off charts, I would look at it around $30. Not really paying attention too much to this gap here. I know I talk about gaps a lot, but I would just pay attention to these previous support areas. It is very volatile. Around $28 to $30. Begin looking at that if you're interested, associated with Tom Lee, okay, and Bitcoin. So BMNR. That is another one to look at. I know iBit is another one that's been hot this year. Just talked about. But this one I like back into, I'll just watch Bitcoin and how it's reacting. But this one looks very similar, obviously, to the Bitcoin chart. If we can get back into the low 50s or below 50, I think it's a great buy. But anywhere around 50, I think get dollar cost average into it. But $50, great would be back into, in my opinion, the slightly underneath 40. slightly underneath 40. Okay. A couple more on the crypto side, and then we'll jump into the S&P 500. Strategy. People are wondering about what's going on with Michael Saylor and strategy. Is this a buy? I always had a little bit of concern with MicroStrategy personally, with just how he's running the company. That's just my opinion, which is why it's so volatile. If you think about it, if you bought strategy share wise and you didn't take profit, you pretty much broke even. If you bought it on this breakout at 150, 160, it's right back to its, level, right, in a year. So it's giving back yearly gains back into that same level from October 2024 to October 2025, right? Not necessarily, in my opinion, what you want to see from a company. You'd want to see it slowly build and build and build, kind of consolidate up here and then build and build. Do I think it can return? Yeah, I personally do, but I still have concerns over it and Michael Saylor and what he's doing. But I'd rather just buy Bitcoin. But if you want to look at strategy, I think from a technical standpoint, I'd rather it fill its bottom end gaps personally. I'd rather it give everything back. The market crashes a little bit more. Bitcoin pulls down to the mid 70s and it's down here and back into 150. That's what I would personally like, because this is where its first pop was. It consolidated and just absolutely took off from 150 to 500. That's not normal, right? So if it gets back down into, underneath 200, cool, right? But I think 200 is a great opportunity for people that may want to scalp it off some oversold levels. But strategy, maybe pay attention to it, what it does off of there. Coinbase. Coinbase is giving me that, it's always followed my gap fill rules. For some reason, Coinbase has always followed my gap fill rules. If there's been a gap on Coinbase, if you could look back over here, okay, let me make sure and check on the chat. Everybody's doing well. Welcome in. Hopefully I'll do awesome. A dip, but eventually go up. Yep. Chicken so it's going to drop. Cool. Yep. Cool. Awesome. Buy. Cool. What's going on, Neil? How are you doing, brother? Let's go into here. So if you look over here on Coinbase, do you see these gaps back from 2024? There's a gap. There's a gap, right? And when it popped on here, it eventually filled that gap, came all the way back off, cooled off. So Coinbase has always kind of followed my gap fill rules for me. Back to the downside, do you see how it gapped up here? It never filled this gap back into the low 200s. So in my opinion, can Coinbase return and not fill this gap immediately? Yeah, but eventually my target for Coinbase is filling that gap, coming back to 180s to $200 and then selling in from there. And that'll be right on the trend line there, and we'll figure out what it wants to do. But got buyers sitting here. If I go to my high volume nodes on a daily, there's some high volume nodes sitting around mid 200s. There's one where it's sitting right now. And then some low volume areas up at their highs where it got exhausted and came back down into the areas. So I've got 250 blasted through there. Let's see. And then back down here into the 200s, low 200s. So there's your crypto analysis for me personally, just to show you guys where it's going. So 83. Yep, I saw that thrown out. 83 to 80. I like it. So cool. Let's go into the S&P 500, get my full analysis there. We are sitting at almost 4:30. So 30 minutes in, we're still good. So if you watched my video from yesterday, a couple things that we want to watch out for this week, if you want to mark this on your charts, is we want to mark out the 577 to 580 level. 577 to 580 level. That is a very key area of interest of the market might want to come back up to try and retest. Try. Why is that level? Why you say 577, Brian? Is because that is the daily 20 moving average, which it tried to get back up to 577. It touched right at 576.91, right? So this light blue line is interesting what it does. And many people have very strong convictions, which I agree with, right? If NVIDIA performs very well and the market gets rallied, and just say the unemployment numbers come in good, right? And then just say The FOMC meetings, they're getting a little bit more dovish. They're like, hey, we may have a rate cut, and we get back above, just say 680, right? And we get back above this 677, and it looks something like this, and we rally, right? Then bulls are potentially going to get a little bit more horned up and say, man, we can go and take out the highs again. But you still have to be mindful that even if we get back up into 686, and again, I talked about this on yesterday's video, is not to, assume too much until we do it. All right. So same thing what happened last time. We gapped up, we ran too quick, we gapped up, and I said, watch out for this 685. I think I made a video last week about it and said, hey, it's not cleared yet. It's not cleared. Okay. And what do? Give the whole move back. All right. So we want to watch the same thing this week, is that I'm not going to say that it's not going to rally and then two green candles and we go up, right? We can play the upside, right? Or what I may do is I may just wait to my key levels, right? I may just wait and say, what does it do down here? And then I don't know, it's in between two moving averages here. Does it clear? Does it not? Does it fall? And people get chopped up in here and we can scalp. But until it clears back above, hits 580, I feel like more comfortable trading off of that level. Does it break through 580, or do we get another big rejection off 580, 577 and come down lower? And it would look something like that. Okay. So I think the Saturday video yesterday, if you haven't checked that out, go check it out if you want to review it. But that is why I want to make those, is just to kind of get it out the way, so people already have an idea of what my thoughts are for the overall market. So you see this lower high here. Where's the next lower high set? Could be right at that 679, 680 level, right? So let me take off some of these here on extended hours. And I want to show you something else, that there is a small gap. All right. Well, Brian, there's a gap up there. Yeah, there's a gap. So just say it fills that gap with NVIDIA earnings and it goes all the way back up to 683. Well, that's still a lower high set right there. All right. So we have a lower high at 686. We have a lower high set at 684. If we have a lower high set at 681, there's our rollover potential. So do you see what needs to happen for us to really take out all-time highs? Is for NVIDIA just absolutely massively kill earnings and we get above 686, 687. There's your bull flag, and there's the takeoff like that. Okay. So I'm not against that. I'm not opposed to that, right? Not opposed to that at all. Cool. So I know I have a dip, but eventually go up. Okay, cool. So I'm not opposed to that. If I have some very perma bulls, like NVIDIA is going to kill it, we're going to go to all-time highs, 700 is the target, I'm not opposed to that. But as a day trader, as a person who likes to scalp, as a person who trades, pretty much every day, 5 days a week, some days I take off, but typically 4 minimum, then I need to pay attention to each level based off of that. If you're a long-term investor and you just trade equity, or you buy longer option calls and you're like, I'm just going to buy it on the dip and just see what happens, then you do you, right? So I'm a little bit more analytical about where the actual bottoms, where the actual tops are, and trade-off levels more specifically. Okay. All right, let's turn off all these things as well. And I want to show you a different tool. If I have some seasoned investors on here, you've seen this tool already. Let's look at the Fibonacci extension tool to the downside. Okay. Since we're setting a lower high here, okay, I want to do a Fibonacci extension tool. I grab it from the top, bring it to the bottom set, bring it to this lower high, and it gives me my levels. Let me turn it on yellow for everyone so they can see bright yellow. Okay. So since we're forming lower highs, we've set a low here. Okay. We've come up, set a lower high, and now we're retracing back up, and it gives us our potential lower ends of the ranges, right? So you see these levels here that we could potentially come all the way down to, depending on if the market finally just rejects and then we can't go any higher. is that we've got a lower end of the range set down into 657, 656, which would be our tariff low, right? So everyone's, predicting this to be the low. Well, we still could come down, and come down like that. And then that could be the low set, right? And I would prefer that, to be honest with you, to feel a little bit more comfortable riding it back to the highs like that, right? That's where I would feel a little bit more comfortable versus chasing, saying, man, this is the bottom, chase it until it clears back above here. Then I can clearly take it to the upside, right? So there is your lower sets, lower end of the ranges there. Okay. So this week, levels I want to watch and trade off of 674. That's our tariff high, right? 674 is our tariff high. You see what happened when we did that. Came all the way down into the low 650s. Okay. So that is my level I really want to pay attention to. What does it do at 674 before NVIDIA earnings? And then most likely, in my opinion, we'll probably try to trap. We'll pull back one more time and try to trap and then go up, maybe fill that gap. And then I want to watch what happens up here. Okay. All righty. Was that cool on SPY? Does everyone get a understanding? SPY? Awesome. What's going on? Welcome Dennis back. Welcome Dennis back. What's going on? All right, cool. Let's jump on Qs. Okay. So again, unfilled gaps up here. Does it have to get filled? No, but in a bullish market, typically those top end gaps typically get filled. So top end of the range would be up here into this 629, 630 area. So that is a top end of the range that I'm expecting potentially that we could pop up into. How do we react there? As we did here, we reacted and fell back lower. So do we fill that gap, or do we drop down lower and then take off to the upside? We shall see. But you can see how this candle formulated at this level at 612. Okay, 612. Be right here. I want to mark that on my charts. Okay, right now, based off the close, it is resistance. But as it builds above it, right, if we get above 615 and set up here above 614, then we can start grinding and grinding. That's what I was talking about, the grind, and get up there somehow. Okay. So bulls got really excited on Friday and probably are going to be excited coming into this week saying, cool, we bounced, we trapped everybody. It didn't go lower. Cool. So that's my sentiment on the bull side, but I still have an idea of what does it do up here. Okay. Also, we're in extreme fear. So does it make sense that we could grind up higher? Yeah, it does. All right. It does. All right. IWM. Any questions on QQQ, or what questions I should say? QQQ. Does that make sense? Because a lot of folks that come on here, I just want to make sure, and some of you are new. Welcome, Ron. Appreciate you. Whoever H3NDOG97 is, appreciate you. Definitely come back. Awesome. Thanks. Thank you for coming in, stopping in. Does that make sense? Because most people are simply just bullish. So when you look on a chart, I want you to realize, okay, cool, we'll probably grind higher, but I want to pay attention to those overhead supports, resistances, to make sure we clear, right? Because you'll step away from your computer, step away from your phone, and next thing you know, it's like, why are we going down? Right? Same thing that happened last time. Popped. Why are we coming down the next 2 days? Why is the market pulling back? I thought we were bullish. I thought the government reopen was a bullish thing, right? So the data this week will really tell us where the market is. If we get that unemployment data, we get that FOMC meeting minutes, it will really get some volatility going of where we're going. Cool. All right. Qs. We're good on Qs. Good on Qs. Good on Qs. Good on Qs. I'll pull this here for the extension one more time for the Qs. If I pull it down to that equal low, just say it sets up here at 630. Right now, that's 625. right? So just say we never get back up to fill that gap immediately. It sets a lower high. We keep rejecting. We keep rejecting. All right, there's some levels down here that Qs may want to come to. 686, 690, obviously that equal tariff low, setting a new low below 595. And then ultimately kind of in this low volume area here. See that high volume node right there around 595, right? 595. Where's our next high volume node, which is why I say, or I'm just being cautious that this low volume area up here is getting a little bit, overextended. Big money does not want to buy up here. So it may grind higher. It may get a liquidity grab even to new all-time highs if that's what people's prediction is by the end of the year. And then there, right? Trying to get back to some of these high volume nodes where ultimately the market wants to retrace back to, very similar to the tariff situation back in April, right? It grinds, it gets some liquidity, gets a little bit stalled right in here. And then finally, bam. So what I'm waiting for is the bam. That's what I'm waiting for, ultimately. Up here, I'm just comfortable. It's been a great year, been a great April to now, but I'm waiting for the next 10% correction. All right, this is a 3% pullback. So anyone that wants to buy heavy up here for call options, have at it, do your thing, may scalp it up, cool. But I want the big pullback personally. Again, that makes sense. All right. IWM, small caps. Small caps are obviously dependent on the rate cuts. So if we have a 50% chance of rate cuts going into December, then it's very important what IWM is going to be doing, because if they can't get those rate cuts like they want to, then IWM could pull back even deeper and further potentially, right? If that is a little bit of a scarcity. The only other thing on IWM is barely hanging on by some of its moving averages. It's below the daily 20, below the daily 50, which is very key, in my opinion, for relative strength in the short term, above the daily 20 and daily 50. Daily 100, kind of that last line of defense. And when we get that daily, 100 flip, that's when the flushes come in. So I want to react off of the daily moving averages on IWM. So what do I expect from IWM? We could pop back into this 242, 240 range, maybe that psych level. There's a lot of overhead supply up here. We've kind of changed direction a little bit on IWM. I would need to see IWM back above the daily 20 to really take it to new all-time highs. And it could be, right? That could be a bull flag. People might look at it as that. Brian, that's a bull flag. It's going higher. Yeah, but I also like to watch the moving averages as well, right? When I was seeing it getting stuck underneath this daily 20 and rejecting off of it and then gapping down underneath the daily 50, it's gone, right? So could it pop? Yeah. Could we get one more pop like that up into that daily 50 at 240, 242? I could see it. We take back out the 246. There's your 250 push. We get some positive rate cut news or FOMC minute news. I think IWM is going to be on high alert with the FOMC meeting minutes on Wednesday, because they're very sensitive to those rate cuts. So probably IWM is going to be on my top watch this week, as it's not the sexy thing to trade for some people, but it pays, right? It pays. And I think especially for beginner traders, even seasoned traders, like you can put size on it. You can put time on it. It doesn't require a lot of money. It's one of those indices that everyone tells everyone to trade SPY, QQQ, but I think IWM, maybe I should make a separate video about being the secret indice that people could really make some money off of without a lot of volatility and crazy risk, right? So I actually enjoy trading IWM. It pays very, very well. Pays very, very well. All right. Cool. Still going good on time. All right. Now's the time to put some tickers in the chat. I'll take requests from any tickers that anyone has, and I'll go over my core companies, Apple's, Google's, Amazon's, Microsoft, obviously NVDA, going to be staying away from until they report earnings. They'll be kind of sideways, probably grinding up for earnings, probably going higher. If you want to trade it, cool. Just be careful of IV. But any tickers in the chat want me to cover? I know there's going to be Palantir. I know there's going to be CoreWeave probably. There's going to be, some other ones that you may have for me. So I'll take a second for anyone in the chat if you want to type it in so I can cover your particular stock on the charts. Anything? Anything. What's going on, Dennis? Dennis be coming out with these Whip Pro. So the first thing for anybody, I'm not going to go into my teaching mode here, but the first thing that I look at when I'm not too familiar with a stock, right, is I look at the first thing, what is it? Technological services and consulting company. Then I go into the financials of it, try to see if it's profitable. Do I see a net income, gross profit? It's probably not profitable yet. Probably still some negative numbers. Maybe it is. Net income. It shows profitability. So if it's a profitable company, it has a use case. Could I see this something that, I would look at as more of a penny stock double up opportunity? So just say someone had 1,000 shares at $2.60 and then taking it to $4, right? So they have 2,000 in, taking it to $4. Would I trade? Does it even have options on this? Yeah, I wouldn't even trade options. I would just, if you have conviction, Dennis, I would just buy shares and just look for those double ups. And if it absolutely just something comes out crazy, and it goes back to some of these peaks. So you got 4.5. Would I look at this as kind of a maybe higher low situation? Yeah. So from a chart perspective, I don't mind it. There's a high volume node sitting right there around 250. So it's right in a buy zone. So if you have conviction, Dennis, I like it back to at least the peaks and the nodes there of $4.70 and $5. So that would be a double up from here, however many shares a person had, and just trade shares on it. So yeah. Quantum computing. Okay, cool. It's in the quantum computing sector. VS, what's going on, man? I'm in an option play on Celsius, but there's a big liquid gap for it to fill. Yeah. I was looking at that today. So I like the sector, Dennis. I like the sector. Whip Pro being in there. So yeah, I think double up, triple up. Let's go with Celsius. So VS, if you want to tell me maybe a little bit. Yeah, thinking of the next Ionic. Okay, perfect. Celsius, but there's a big liquid gap for it to fill. I'm in an options play. Can you give me maybe, if you don't mind, I can answer the question better. The option play that you're in, maybe like what strike price? Because I can be like, hey, you got time. That's cool. If you don't want to share, I can just give you an idea of maybe where the bottom is. I like this area here. This high volume node sitting right on the weekly chart, sitting right around like the mid 30s and approaching 40. Okay. Approaching 40. So where I kind of get the big swings, where I like my swings to be, or, swing option plays to hold it for a little bit longer to get that gap fill and reverse back up to 70 and then 80 and then 100 plus back up to the highs. I kind of want to see that weekly chart start to curl up on the MACD. Right, you see that weekly chart curling down on the MACD and also the RSI kind of coming off of there. It's getting a little bit in the kind of a oversold buy range on the RSI, but that MACD is still curling down on weekly. If I go into a daily on the MACD, do you see it's not curling just yet, right? So the weekly is kind of I'm very interested that this is the bottom. The daily is sort of my entry point, right? So you'll see traders or investors, if you watch other traders or investors on the YouTube streets that are very technical, they'll look for divergences. They'll look for, MACD crosses, crossing up on the MACD, things like that. That signifies like, hey, this is a potential bottom. If I see it still holding and gapping. So the MACD is this yellow line here. If I still see it holding underneath, if I still see it crossing on the weekly, I'm like, it probably has a little bit further to go. If I look on the chart, what does that look like? A little bit of a bear flag to retest the lows. So the lows at 40. So it could take out 40 and come down to that 35 level, right? If I go into the 4 hour, it's starting to cross a little bit, right here. And if I go into a 4 hour RSI, a little bit of, I wouldn't necessarily say divergence there, but maybe there and then maybe here. Something like that. So if it makes it equal low, maybe you could get a pop on it very quickly, right? So the 4 hours also a testament that, maybe this week or maybe in a short day this week, it could have a little recovery like that back to the upside, right? If it holds that psych level of 40. So based off the analysis, could I have short-term pops? Does it signify the bottom? Maybe, maybe not. So I'll look here, see if you, yeah. So I like to target on this. It has a huge gap to fill, obviously, but I like to target the previous gap down level. So 49 would be a first target. Obviously takes out 50, it's gap fill, right? And I'll touch on the futures and ES and gold as well. I know people are interested in that, but yeah, it's approaching a really interesting level here on Celsius. I think they had pretty good earnings too, from my knowledge. I think they had pretty good earnings as well. Some high volume nodes sitting here, sellers stepping in mid 40s. So yeah, buyers are going to probably start stepping in pretty soon, or everyone exiting their short positions. Yep. So once you get that, I'll come back to it. I don't want to be dumb, but I'm using Moo and don't know how to see my strike price. That's okay. That's okay. How to see my strike price, but I'm down 137 with an average of 185. Okay. On the option, it should say what your strike price is, like right in front of you. If you can see how much you're down, it should show you the contract. Should show you the contract. So very similar to Moo is very similar to Webull. Right. So in the options, like I should be able to see exactly what my contract strike price is if you can see how much you're down or up. So let me know if you see like a different number there and the expiration. But yeah, if you can kind of search around, it should be right there in front of you. Yeah, you're not dumb at all. Not dumb at all. Average 185. So just hopefully it has a little bit of time on it. All right, while he's getting that, let's go into some top plays for this week and what I like. If we are strong, like if we bounce back, on the S&P, on the overall market in general, kind of want to have a little bit of idea of what's strong in the market right now. If y'all knew or didn't know, Google had a little bit of extended hours upside. Okay, so this is going to be a catalyst on Google. However, if the market is a little bit weak, then Google won't be able to go, right? So Google could be that catalyst, kind of that one that's already had earnings, had really good earnings, already had the reports. Everyone's eyes are going to be on NVDA and all the semiconductors. And Google could be that sneaky one that could potentially try to hit that 300 mark, right? So we've been kind of shorting the pops on Google. It's been paying, and we caught a couple of them and kind of missed this big one here that I really wanted. But Google is going to have a gap in the morning, right? Anytime a stock, the closing price was right here. So I love, when things gap up, because typically they grind to their higher price, then it's going to be overbought, and then people are going to take their profits and then pull back, right? Just a little bit. So Google might be one of those main watches like Monday or Tuesday, potentially, on where it trades off of. We're very comfortable in this resistance area, but as Google pulls back, is Google strong enough above this daily 20, because it has not broken underneath this daily 20, you see that there, to kind of turn into more of a bullish flag. So Google's going to be on high alert, high watch, kind of trading the volatility of it with that positive catalyst news up and down on Google. So if you're in live trading with me, just know that I'll probably keep a high alert on Google because I'll know that it'll have a gap up in the morning. So could trade off of that, obviously being patient that it might continue, gap and go a little bit more. But then if it gets to the top end resistance at 290, you know what we've been doing at 290, right? Shorting Google. All right. Let's look at Microsoft. Everyone's eyes have been on this Microsoft as well because this 500 has been very important. My only concern with Microsoft, I'm not a big fan of the chart. I used to trade Microsoft very heavy when it was more in kind of this nice flowing movement back in 2023 and here flowing, and then it pulled back to there was a great opportunity. But up in here, it's just been kind of sideways, to be honest with you. Like if you caught that off earnings, that's cool. But this kind of, I've been calling it the Nashville Peak building. I think it's the Bank of America building or whatever building in Nashville. It looks like those peaks, just a double top there, and just not really interested in what it does here personally. But it is holding up a key level. It could recover if the market gets strong again, that this is a bullish consolidation to rotate back to the highs. If we look at the daily moving averages, and there's also a gap, if you're interested in Microsoft, getting back above that 520 level would probably be of interest on Microsoft to retrace back to these highs and see if it can take it out, right? But kind of just trading a channel on Microsoft for right now, at least for right now. But right now, this is bullish consolidation until it breaks this channel. I was telling my group that if the market somehow gets extremely weak, like black swan event, something like that, like you want to have on your watch some of these overextended stocks. Like Microsoft is a short seller's put person's dream if it falls below these lows of 492. There is nothing on Microsoft down into 450. It'll probably have some pit stops, but straight up move, straight down move, right? And there's even more gaps to fill down here if for some reason they have some type of, I don't want to wish any bad thing on them, but y'all know what happened with UNH, okay? So they're going to put something out there on Microsoft to drive it all the way back down, most likely to fill those gaps at some point in time. So you will get Microsoft, in my opinion, whether it goes to 600 and then does it, but you will get Microsoft back to the low 400s, 300s, most likely at some point in time. All right. So be patient on Microsoft. It's very bullish. Obviously, it's in the AI race as well, cloud computing, things of that nature. All right. Meta. If you're dollar cost averaging into Meta, awesome. Awesome. Okay. If you don't have as much money or don't want to put as much money into some of these big things, it's like, man, I don't want to miss the next Meta run. I don't want to miss the 2022 situation with Meta. What happened? It ran from 80 to 4, 5, 6, 7, 800 at this time. I don't want to miss that again. Meta's a great opportunity. Do not dismiss some of these leveraged ETFs. Okay. So METU is a way for you to participate in Meta. Buy it for your kids, whatever it may be, but METU in the mid 20s is a great opportunity. Okay. So I'm going to talk about some smaller stocks as well that have great opportunities. That's why I usually leave for the end of the video. So we're coming up into the top of the hour. So we'll wrap up in the next 15 minutes. Okay. So METU, great opportunity there. If you didn't know, Amazon is also another one. So if Amazon's getting out of your range, you have AMZU. Okay. So Amazon, same chart. The top end of the range, if we believe Amazon's going to take off in the AWS world, so on and so forth, you can grab up some shares of this and still participate. So this is what I've been telling, some of my younger, clients or, mentees or whoever that are in their, there's people in their early 20s. Right? They don't have a lot of money and they're like, man, like you can buy the full one, or you can also get some leverage versions, being careful, dollar cost averaging, but you feel like, okay, I can get involved. And if it goes from, 36 back to 50, then you've almost doubled your money. Right? And you feel more empowered in the stock market. So AMZU, that is another one. Google just absolutely ripped. There's leverage versions of Google as well. Let's talk about Tesla. What is going to happen with Tesla now that it broke out of this consolidation range? I've got a bottom end target on Tesla of 350. Okay. Please be patient on Tesla, in my opinion. Okay. If it held up 400, but it's underneath this overhead supply. Okay. So my boy Trent caught Tesla puts, called it out in the community. I missed my entry. I was in another trade, but I said, if Tesla breaks below this 412 level, that's 2021 highs. All right. Do you see that right there? 2021 highs. What happened last time? It plummeted down to 109. Do I think this is going to happen again? Who knows with Elon? Okay. But Tesla is back below the 2021 highs, and the very high volume rise here on Tesla. There's very low volume on this area on a daily chart. Do you see these high volume nodes here? All stacked up here. Everyone entering call options. Tesla's going to go to 500 from here, and they stacked up. Now they're trapped, right? So they got to decide, like, man, please, please, please come back. They're holding. And if sellers decide to trap all this liquidity up here, all those call options, well, guess what those call option buyers are going to have to do? They're going to have to sell out of their positions, and that's when you get that flush down to the lower end of the range, right? So Tesla, in my opinion, very low volume in this area here. So if you see Tesla pop any higher, be careful that it may not take off, because it's just popping back into these resistance areas on this lower high set, right? So Tesla could go all the way back up into this range. In my opinion, you wouldn't like it to, but if it stays underneath, right? This is where you want to get involved in Tesla. I don't like to trade Tesla and have left it alone since it's been up here, right? But Tesla is an opportunity potentially back down into this 350 area. If Tesla is too much for you, you're like, man, Brian, Tesla contracts are super expensive and it's super volatile and I don't want to mess with it. TSLL, right? TSLL, same chart, overhead supply underneath really, I would say 18. TSLL has room back into 12. That would be Tesla 350, Tesla 360, back into 12. So guess what? Again, beginner's dream, even a person that doesn't want a lot of stress and risk. And it's like, man, okay, like I can trade Tesla. I don't see any great setups. Maybe this happens and I can stop out if it does. It's not super volatile. I can go all the way out to December 19th on TSLL and look at the contracts. If it does what it's supposed to do and pulls back, now if it reclaims, that's a different story, but I can put time plus be in the money. All right. Do you see these puts over here? 16 puts right in the money. Or maybe it drives a little bit higher and that gets cheaper. 16 puts. I mean, somebody would look at 12, 13 puts. Yeah, you could. I mean, you can go all the way out to January 16th, right? I don't really like how those are priced or whatever they're doing there. But yeah, if we believe Tesla could pull back a little bit, you could look at, that pullback level to those areas, right? So if you never traded TSLL, it pays. When Tesla was dropping, these TSLL put contracts were over 200+%. Right? So keep an eye out for Tesla. I think, there's a way for big money to trade it, and there's also a way for beginners to trade it, So TSLL, also an opportunity there with Tesla breaking out of this range. All right. Check chat. Everyone good? What's going on, Tanvir? APLD, what's going on? Okay, strike is 45, expiration November 21st. Okay, that's this week. 45 strike. Average cost 185. Okay, I'll cover that really quick. Average cost 185. That means your entry was yeah, that means your entry was right at the top end of the range. Okay, so right when it kind of dropped the second time. So just based off the chart, I know that VS maybe chased a little bit, but it looked good. So your entry was right on this rise here, and you entered right around that 45 mark, kept it in the money, gave it some time, and then you just unfortunately had that drop the next day, and it's like, oh my gosh, right? So what I tell people on weekly contracts, and I tell my community members as well in leverage, is you want to make sure that if you have a weekly contract, right, and it's down, you're down 50+%, right? I'm not sure how many contracts you have in it. If it's one, you want that contract to start working in your favor Monday, ideally by Tuesday, right? After Tuesday, it's going to, in our case, in my definition, it's going to start becoming a lotto. That simply means like it's going to be devaluing every day the more that it's underneath that 43 and going down to 40. And you're like, oh my gosh, like maybe it'll recover by Friday, right? It's going to be devalued. And even if it gets back up to that level at 45, 46, it might not be worth $185, right? So you really want, it to start working in your favor Monday, Tuesday, maximum give it Wednesday. Maybe you're like, okay, Brian, I've already lost the money. Like it's one contract. I don't want to lose it. I don't like to talk in those terms. Then leave it. If you're already down 70, 80% and you're like, okay, I'll give it just in case. But structurally, right, I would have probably set a stop loss, once you were up here and set it, stop loss. But that's just my opinion. Right. So just wanted you to, understand that, I'm not sure your level of expertise. You could be experienced and you're just like, hey, I like it. Or you could be just getting started. I'm not sure. But that's what I would say with that is even though it's so close at 43 and it's like I have a 45, every day that you've held it, it's been losing value the more that it hasn't been getting buyers to pop higher. Does that make sense? Does that help you out? Now, if you had it till next, maybe December 19th, right, I would have liked it better, but I'm not a big fan of this, below the daily 200. I'm not a big fan of that. Below that moving average right there, which is right at 44, just say 44, right? That tells me typically it's going to drop like this. I'd rather be honest with you. All right, then say, yeah, it's going to work out. And then you come back like, this dude doesn't know what he's talking about. So I'd rather be honest with you and say, based off of candle structure, location, moving averages, you see what happens when it gets below them. All right, it's coming down to that next area of opportunity, which is 35. All right, so hopefully that helped out. APLD, let's look at it. APLD. All right, quantum computing, digital space, data centers. Let's look here. I'll give you my buy zone 1, which is right at the daily 100. Buy zone 1, $20 to $22. Right? So right where it is right now if you're doing shares. Tabitha. Right? So right now where it is, all right, is 20% off the highs. Now, where do I think is a safer buy zone? Back underneath 12. All right, giving the whole move back and just resetting. All right, giving the whole move back, the straight up move back into $10, $11, $12. Which sounds crazy for people. It's like, yeah, but stocks aren't meant to go straight up in 1 month. All right. So where's our reset? I've taught you this. Where's our reset? Break. It could be on a monthly chart. Break, retest, ideally, of that $12 to $13. But it's close enough at 20 that someone could begin picking it up. Where's our daily moving averages? All right. Daily 200 is sitting where? Right at 12, 13. Daily 100 is sitting right here, but it's underneath these. So it's kind of in this, little pickle kind of situation where it looks like it's going back higher, then it rotates right back over, right? So I never want people to miss out on this small dip if they have high conviction, just like you did with, was it MP that we were in? I forgot what it was. Was it MP you were asking about? I forgot. So yeah, that's what I would say for share buying. Right now, around 20s, and then load up zone back into the $10 to $12 range. I think that is what people are most interested in, is what's going on with all these quantum computing, just like Dennis asked, right? Quantum computing is going to be the next big thing. Ionic, Rigetti, all these, right? They have to still prove themselves because AI is still so early. Does that make sense for everybody? So these companies are not a NVDA yet. They're not a Google yet. They're not an Amazon with cloud computing. They're not there yet. So them going straight up is simply a sentiment, right? So retail got their money, everyone started chasing, and then they've got to start proving themselves, right? So this pullback is an opportunity for people to say, cool, let me get a dip and then let me start doing more research, right? Because Rigetti, QBTS, Ionic, all these, they will take time over time. But yeah, like we caught Ionic at the bottom, right? Down here underneath $10, and it went almost to 100. So yeah, these can do that, but you never want to chase anything that is new and hot on the scene. Even MP, all these material stocks, right? You want them to pop. If you're a part of the pop, great. But then when they pull back, they could give back 70 to 80 to 100% of the move, and then start doing your research, right? Get involved, then start doing your research. So from a technical, 13, APLD, and then 20. Does that help out, Tabitha? IWM is the indice for the small cap companies. So that ties in perfectly. All the things that popped this year, Rigetti, Ionic, MP, everything that was new in the quantum computing space is inside of IWM. It is all the new up and coming stocks, right? Small caps that need funding, that are not yet profitable, that are trying to develop revenue, right? So IWM might be that index that if people are interested in some of these upcoming new stocks that may move, right? Go look at IWM Holdings and look at what the top ones are. IWM Holdings. IWM Holdings. Okay. What are the top ones? Bloom Energy, right? Data centers, Credo, right? Ionic, Katos in the defense sector that popped very good this year. Oklo, there you go, Tabitha, Oklo. So everything that everyone wants to be a part of, that they're like, man, I missed the first wave. Where were they located? Inside of IWM. So guess what? What did I just say earlier about small cap companies? When there's not any rate cuts, or when there's concerns about the economy, what are the things that are going to fall the fastest? The things that don't have cash flow, they don't have enough revenue yet. They're all based on speculation. They're based on future performance. They're going to crash the hardest. Does that make sense? Right? So I was like, cool, great. Made money on this, made money on Oklo and Ionic, cool, but expect a full 50% retracement. That's when everyone panics. They're like, it was just at 100 and MP went all the way back to 50. I'm like, yeah, because it hasn't proven itself yet. Right? It's based off of future performance. It's not an Amazon that pulls back only 3 to 5%. It's not a Google that only, crashes 2 to 3, 4%. It will pull back 70%. Right? So be careful on those. That is why I wait to almost the full retracement areas, right? 70%, 80% from the highs, 50%. I start getting involved. I start researching the company more. All right. Let's talk about CoreWeave really quick. And I apologize for the going over a little bit. Look at CoreWeave from the highs, down 66%. All right. This is when I get interested, right? Between 50 and ultimately right at this retracement area of around 70, right? That is where we were researching Robinhood when it took off at 10. It popped on IPO, cool, awesome, everyone's hype, cool, whatever. Now you got to see if the company is sustainable. So data centers, AI race, CoreWeave, back risk to reward, great risk to reward between $65 and $70. So if you're already involved in CoreWeave, if you bought the dip down here at IPO, 30, $50, if you're underneath the water because you chased it, I think now is a time to start researching CoreWeave and then its quote unquote competitor, Nebius, right? It's been around a little bit longer, but Nebius has a gap, right? So I would say Nebius probably, buy zone 1 at 80, but probably a better buy zone back into the mid 50s, right? Better buy zone back into the mid 50s at this high volume node right here at 65 and then, into the 50s. So you can buy a little bit here, but back closer to, these areas down here. Does that help for everybody? Wolf. Yep, exactly. We're on the same page, Trent. Nebius back to 40s. Yep, we're back on the same page. See that high volume node down there on a daily, right at 50? Yep, it's got some gaps to fill. Y'all know me in the gaps. Fill all those gaps all the way back down to 45. All right. Love that. Love that. Love that. So a chart will have you more convicted and patient. Somebody that's anxious that they're going to miss the move will have people underneath water because they don't have a chart to make decisions. Terra Wolf. Oh, it's approaching, Dennis. It's approaching. It's approaching. So you already know. Gaps below, right? Approaching the daily 100. So that's going to be a first pit stop right here at 8. Into the 8s will be a first pit stop. I don't see any buyers. I see a hanging man here and just flushing down into that area there. I think personally, risk to reward, probably back down to the 5s. So giving back the whole move, in my opinion. But a target potentially back to 20 plus. If you've done more research on it, obviously you can potentially have this happen in the future. I've done some research on Terra Wolf, but nothing substantial. But yeah, I like the build on this. I like the buyer sitting here. I like it coming up. So starting to build very similar like it did last time back in 2020. All right, consolidating right around that $8, $9, $10 range and then rolling all the way back up to here. So yeah, I think great risk to reward, Dennis. Just think of it as a double up. If I take it from 8 to 16 share wise, or if I get a leap in it, if I do both. Yeah. I like it. Cool. Appreciate you, VS. Appreciate you. If y'all enjoy the teachings, y'all want to join the community, y'all are more than welcome. If you want to stay on YouTube and still figure me out, see if you like it, that's cool too. No pressure at all. Corey, what's going on, man? Awesome. Any final things that I need to give out for this week? Maybe a final sentiment on maybe what NVIDIA is going to do. And we're right at the 15-minute after the hour, so right on time. Here's my thought on the video. What I still have very high conviction on the video coming back to 150. I still have very high conviction on the video coming back to 150. Some of you are like, man, the video is falling back underneath the 100 again. I could see that too. It's going to need a catalyst. We're going to have some type of bear market or something. But there's still some gaps down here on the video. All right, there's very, very small gaps. Do they have to get filled? No, but if I see a chart and I trust my analysis, this would still set a higher low. This would give the SPY pulling back to my target of 600, right? My 10% pullback on the market, right? So this area right here, this is what I'm looking for. You see that on SPY, 10% pullback into the low 600s. That would give a potential NVIDIA pullback, most likely back into that 140, 150 zone. All right, 10% would be, it would need to break underneath, 165, 170 first. but that would still scare people. Like, NVIDIA's crashing. I'm like, yeah, okay, whatever. But that's still higher lows, higher lows, higher lows. All right. So I think NVIDIA personally, can still rise. I don't. It's the largest company in the world. Jensen's very bullish. I think he's an amazing CEO. I think NVIDIA this week, still have a target on it back into, especially everything being extreme fear, back into this gap fill up here. That's kind of what I'm looking for in NVIDIA, is to, just take off and do that. All right. But Palantir also, shows me what can also happen. Pop in the after hours, everyone gets excited about Palantir, and then it pulls back to 160. So it's kind of a crapshoot. They could kill their earnings and it pops, and then it just fades after hours or does something crazy. So either way, we'll try to make money on NVIDIA. Cool. Told you on my top short setup that I'm really eyeing, that I want. I have 2 top short setups for puts that I'm kind of eyeing. Some overextended stocks if the market gets weak. Maybe Google, but it has positive catalysts right now. AMD is in this rising wedge situation. If I see AMD breaking down some of these levels underneath 240, I mean, that could be payday. AMDL, also the same thing, right? AMDL back into 12 is sitting at 20. So that's the leverage version of AMD. All right. So AMDL back into 12, gap fill, stuff like that. And then INTC is another one that I like. So also in the semiconductor sector, we know everyone's bullish on Intel, the government's paying, but also from a technical standpoint, it looks a little bit, I don't know if y'all see this, but it looks a little bit head and shoulderish to me. Right? But it's got to show weakness continuously underneath these moving averages. Falls underneath this daily 50, it's going to be a free fall. Free fall, most likely down into 30 and most likely down into the mid 20s again for that gap fill. So I want to have my eyes on, if there's any negative sentiment on the market, I want to immediately probably go to some of the semiconductors that have been ruling the market, because they'll have probably some profit taking. Right? AMD, INTC, even TSM has gaps below. MU's just been absolutely on a tear. I don't want to step in front of that. But yeah. Yep. Cool. Y'all can see how dark it gets in here in Vegas. All right. I know a lot of y'all are stepping out right now, so it's cool. AMD needs to show it can really deliver. Yeah, it does. Definitely does. So VS, if you're still here, use the code Black Friday for Leverage University, the analyst level. Would love to have you inside. Yep. Google, what's going on? Ben. All right, everybody. Peace, love, and blessings to you. That was our hour 15 and some change. And I will talk more about it on the Twitter streets, another video. And then tomorrow we'll tap in to see what the market looks like. I'll watch Google in the morning because there'll be a gap up. I'll watch some of the semiconductors, see how they're reacting. But a lot of them, they're just going to be waiting on the video. All right. Peace, love, and blessings. Until next time, thank y'all so much for the support. We're growing like crazy. And I'll see y'all in the Leverage University live trading streets.